One of the things that everyone's talking about is the rise of car insurance has been ridiculously high. We've seen in the last several years it go from 10 to 12%, which is the average in general for the last probably decade. And then going from that to 20% to 35 to sometimes 50% increase over the last several years. Ever since what happened, people couldn't drive, lots of things happened, inflation went up, cost of materials became more rare, and now we're more worried about the inflation of the tariffs. So what's going to happen because of all of the changes that are happening with the rising of cost of goods? Insurance will be impacted. It's not going to be as major as you think, because what has happened actually might be a little bit of a fix for what we're talking about. Let's dive in and go over the specifics that we mean as far as the changes of why the prices might go up, but also why I don't think they actually will. By the way, if you are shopping for car insurance, I'll put a link in the description below where you can work with an independent agent. If you look online, I just had to check it. I checked ChatGPT, I checked online, and as I've made in probably the last 100 videos, we talk about what is the number one thing that you can do. It's shop. Every company's telling you shop, every person's telling you shop. I'm actually telling you not to shop if you trust the agent you're with. If you like the agent you have, stick with them, give them the opportunity to try to find you something better. But if they're not independent, you might as well start looking. At the end of the day, I'll put a link in the description below. If you're not working with an agent that you know, like, or trust, then you can work with one of the ones that we work with. So now the main thing is with the tariffs possibly taking effect, with the taxes on imported goods, that's really what we're talking about, is the rise of that. If that goes up 25%, what's going to happen is true. A lot of car manufacturer parts come from outside of the US. They usually come from Mexico or Canada, which will get taxed on tariffs. So you'll have a higher charge or a higher cost to get those repairable pieces that you need for your vehicle. What that in turn means is your insurance probably will see an increase. At least the cost to repair the car is going to go up. Your mechanic shop is going to go up. If you just need general repair, the cost of the insurance is going to follow suit with the repairs as they go through. Here's the thing. 6 to 7 out of 10 parts are from outside of the US. What a lot of smart companies do, like Hyundai, they take the parts, they import them into the US, and then they assemble them in the US so that they technically can say they're USA made, and that's good. That actually does provide labor. I think they're out at Alabama, if I'm not mistaken, but most companies do that. Even Chevy. A lot of Chevys, if you open up the door, like a Chevy truck, look at their vehicles or a GM vehicle, there's a sticker that says where the vehicle was made. A lot of the vehicles were made in Mexico and they were imported into the US. If you have a vehicle that is a foreign vehicle or that takes parts that are not from the US, if they're imported, you are likely going to see the specific vehicle have an increase in premium. That means that policies are broken up into individuals. That's why we say we create a profile. Where you live, your insurance score, your credit technically plays a factor. That the vehicle that you own, that is the bigger piece. The vehicle you own will make a larger impact on what you pay for insurance. If you're driving an imported vehicle, those cost of prices will rise. I would estimate an additional 12%. So you're probably going to see 12%. And then because of your vehicle, you'll probably see a 5% increase. Mark, why not 12%? Because insurance already has inflated themselves a little more than I believe they should have. What I mean by that is because of all the weather disasters, Texas and Florida and California having the wildfires and the hurricanes and the floods and the freezing rains, all those things, a lot of things have happened that insurance was not prepared for. That was 2 years ago. And it happened again the following year where they were a little bit more prepared. But now I think going into 2025, insurance has become very well aware of some of the disasters that they could be facing. The odds of them having double those disasters or extra disasters in general are near impossible. So they've raised their increases or they've made their product, their prices, based on the risk of what they think across the board is going to be. You've already seen that increase. So for those of you that have seen that increase, guess what? I think in 2025 and part of 2024, we can already predict, has not been as bad as the year prior. What that means is the risk is too low for the price they're taking it. That means that these insurance companies aren't going to necessarily raise the rate just because they can for 2 reasons. One, they are governed. So the state will come back and say, wait a minute, you can't do that. If you're reading articles about California wildfires, you're seeing all the things about how State Farm tried to raise 22% because of all the wildfires, yada, yada, yada. They can't. the state is blocking it and they're saying, nope, you're not allowed to do that. Not right now. There's too many people that need help. You can't do this. You can't non-renew. All of these things, which could cause them to leave the state altogether. So that's the option. They're still a company. So they don't necessarily aren't controlled by this government, but there is a piece that the government will say, wait a minute, not good. That means that the government can step in and say, wait a minute, you're charging way too much for these customers across the board compared to other companies. So if you're charging too much, we want you to either A, refund the customers back what you've overcharged, or B, we want you to stop and we want you to reverse. But because the imported cost of parts and all of that stuff has risen, there's a reason for them to have a higher premium. It just means that you're already paying for it. Please forgive me, my channel runs on hot chocolate today. I had too much caffeine already. I needed to slow it down. We'll get the caffeine out of the chocolate. That's the largest piece we're talking about. I know the title talks about what are the three main ways to safeguard yourself from increasing on prices. That is probably the first way. If you're buying a vehicle and you're purchasing them, be mindful that if there are tariffs, if this processes go through, then you might be, one, paying more for that vehicle, unless it's already been imported and there's no extra cost, then you're good. Or B, that your parts are going to be more expensive. Be careful with the vehicle you purchase. I'm not saying that you shouldn't buy the car that you want. I'm just saying be a little bit mindful of the cost of repair and the cost of insurance. Not necessarily this moment, but add an extra 5% just to be safe. The second everyone talks about is bundling. I'm not gonna go into that. You bundle your home and auto. You bundle your renters and auto. There's a 40% discount on average that I've seen that gives you that deal. If you're paying $20 a month for renters and it saves you $60 a month on your car insurance, that's a no-brainer. You should be doing that. You honestly should be doing that just in general because you want the renter's insurance protection, because it covers liability. If you do something outside of the home, outside of your apartment, any of that stuff and you're liable for it, you've got some hundreds of thousands of dollars to protect you. So there's a benefit to having that. Not only that, but there's usually a cost savings. I'd say half the time it's usually free, no extra cost to have renters. So if that's the case, there you go. If you're shopping, bundling home and auto do make a big impact because again, you're getting that 30 to 40% off by bundling those together. Not always the case. You can do a better deal by separating them, having your car insurance with a Geico or a Progressive or a Safeco or all those companies that we shop with, right? And then having your home with a National General or an Allstate or one of those other companies. Sometimes breaking apart does make sense. You're gonna find that most of the time your independent agents are gonna be able to do that. If the agent takes the time to check those, it's usually the best option. Now, bundling is usually the better way to go because putting them together gives you that larger discount. The reason that makes a bigger impact is because most states required that they couldn't do a homeowner's discount. So being a homeowner was a discount in the past, but it was discriminatory. It was against people that rented that chose not to have a home. And because of that case or couldn't afford it, they shouldn't pay more for it. So what they did is they took that piece off, but the way that insurance gave it back to people is they allowed you to bundle. So if you've bundled it, and so what used to be a 20%, 25% is now closer to 30 to 40% of a discount on your car insurance. Same goes for your home. You get usually that same discount. Now let's be honest. Let's not talk about all the fluff and what everybody says you should have. The next biggest discount that I know that you can get is something called Telematics. Not everybody's gonna wanna do this. Watch my channel. There's a ton of videos on different companies that are optional for you. If you want to try Progressive, if you want to try Nationwide, if you want to try State Farm, if you want to try Allstate, they all do something called Telematics. And Telematics is a way for you to prove that you're a good driver. What that means is they're going to plug in a device in your car, or you're going to plug in a device in your car, or you're going to grab your phone, you're going to download an app, and it's going to track what you do. In most cases, you're going to have a 3-week to a 90-day period of your phone or the little device tracking your driving habits. Now what that does is if you have the plug-in one that actually connects to your computer in your car, it knows the speed that you're going, it knows where you're going, it knows the times of day that you're driving, it knows how fast you brake, and it knows how fast you accelerate. Those are the main pieces that they care about. Speed is actually not really one of them. Honestly, insurance doesn't care if you speed or not. If you do and you don't have accidents, then you're good. You got away with it. If you get a ticket, it does make you riskier that you're likely going to have a bigger accident if you have one. And I get that part, but in general, it doesn't mean you're a necessarily bad driver. It just means that you're a higher risk driver. Those are the 4 things. Braking, acceleration, time of day, and the miles that you drive, where you're driving location. Those companies want to know that most people are just driving to work and back, to work and back, maybe the gas station, to work and back, to work and back. If you're the young driver, like we were when we were young, you were driving to buddy's house, driving to friend's house, driving to the gas station, driving to the movies, and you're all times of the day, all times of the night, you're just go, 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 go. That's high risk. That means that you're on the road a lot, one, higher mileage, but two, you're also going to zip codes that might have higher risks. And if you're bouncing around between all of these zip codes, that will raise the cost of your insurance. If you can prove that you're not that person, you're talking 10% off today, and usually 20 to 30, some companies tout 40% off on top of everything else. So you can save several $100s by doing the telematics. Let me know in your comments below if you think that's something that should be rated. I personally like it. I know we're giving up our personal information. My phone knows everything. I'm looking for furniture lately, and every other scroll is an ad about furniture. It's just, I don't know how to shut 90% of this stuff off. I might as well get a discount on my car insurance. I know that's the wrong thing to say. Let me know what your thoughts are in the comments below. If you are shopping for insurance, the next major piece that you need to worry about is the coverages you carry. They actually affect the price, but you also should know what you should carry to protect yourself. I've got my car insurance 101 that's going to go more in depth on that. If you're trying to get more discounts and just try to save a little extra cash, there's also a discount video here that will be helpful. I'm Mark with Think Insurance. I'll see you in the next one.